Hey everyone, and welcome to another season of Earnings Cheat Sheet for Friday, October 10th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, we're coming to you quarterly for now, still until there's any rule changes. But you and our producer Meredith Heyman had a great conversation about what any potential earnings rules changes might look like. So if you're interested in that, check that out at investors.com. But Ed, before we dive into all this, what's the prognosis here for Q3 earnings?
Think it's generally fairly positive. We're seeing the bulk. Keep in mind the bulk of the S&P in capitalization are these mega cap techs, and so while the U.S. economy, has some mixed bag here and there, the parts of the AI economy is doing very well, and there's a lot of areas that are doing quite well, and I think that's emphasized on the stock market. JPMorgan and Interactive Brokers aren't necessarily AI plays, but Taiwan Semiconductor definitely is.
All right. Well, those are the three names we're going to be taking a look at today. So let's start with JP Morgan, which is scheduled to announce Q3 earnings on Tuesday, October 14th. Earnings for the banker are projected to climb at 10.5% to 483 per share, and revenue is seen rising 5% to 45.47 billion. And here's why we're watching JP Morgan. Analysts expect strong performance for investment banking, trading, and asset wealth management categories. And we'll also want to see if there's any AI related savings update, Ed. And as you mentioned, not technically thought of as an AI play, but AI has been a major focus for the bank. It's in its early phase of the AI blueprint, which is deploying agentic AI agents to handle some tasks there, and I'm sure interface with consumers. But what's on your radar with JP Morgan?
Yeah, I wanted to see all those kind of signs because there's have been positive signals. I think Goldman Sachs said positive things about investment banking several weeks ago. Trading seems to be pretty strong. You're seeing Fed rate cuts should be a tailwind for the economy and maybe lending. Though we've seen some things. We've seen some issues like some lenders, not necessarily these big banks, but some lenders. Are we seeing more delinquencies? Are we seeing more late payments? Those are little things. But yeah, AI cost savings, they seem to be doing a good job there. This is just JP Morgan has just really been the standard for big banks, and it's been doing quite well. You just sort of expect that to continue.
Well, let's look at the chart here then, Ed. For JPM, looks extended from this double bottom base buy point here back in May from 254.67. Probably gave investors some chances along the way to add on or enter with some of these pullbacks here. But recent action, Ed, it's below the 21-day line. That 50-day line is catching up. So, what are your thoughts here with the technical action and what are you looking for?
Yeah, the 50-day line and the 300-day level, and there was sort of a short consolidation around 301. So there's a lot of areas. It's coming down to where you might expect it to. It's there's a potential for it bouncing off the 10-week line, especially if it gets above the 21-day line on earnings. So this is definitely one that could be potential. This is a graceful, gradual, modest decline to the 50-day, 10-week line. So this is what you'd want to see here, and it could be the start of a new base. We'll have to see. We'll just have to see how earnings go, because again, if this falls sharply through the 10-week line, well, that could be more of a sell signal, especially for more recent buyers. But yeah, this is one. Definitely the earnings reaction could be probably a buying opportunity.
And looking at the fundamentals here, Ed, we see 10% growth expected for 2025. Not a surge in EPS and sales like we've seen in some other names here, but pretty solid growth over the last couple quarters. A little bit back and forth with sales, Ed, but anything jumping out in terms of fundamentals?
Yeah, the earnings have been solid. They're supposed to slow down, so we'll see how that goes. And the revenue growth also has slowed down. There was that blip. I'm not sure all the reasons why. There might have been sale in there. One other thing is net interest margins. That's also like, if like the net, what is the margin they're getting? I mean, banks do all sorts of things, but ultimately banks want to borrow short and lend long and make that margin off of that. So what JP Morgan and what we were talking about with JP Morgan sort of applies in many cases to other giant banks and to smaller banks, especially the traditional lending, the traditional net interest margin. Those things will be important for investors for the whole sector.
Right, Ed. Well, let's move on and take a look at Interactive Brokers, which will report Q3 earnings on Thursday, October 16th. Earnings for the brokerage platform are expected to jump 23% to 54 cents per share, and revenue is projected to rise 11% to $1.365 billion. And here's why we're watching Interactive Brokers. Trading volume has been strong, so we'll want to see if Fed rate cuts hit margin income, Ed. And talk to me about Interactive Brokers here, because again, we've seen financials doing well here lately, Ed. So what's on your radar with Interactive Brokers?
Yeah, I want to see about how their margin and other interest-bearing income. That's a big thing. Trading has been strong, so that's something that shouldn't really surprise. They came out recently with some positive trading. They've been getting into prediction markets like many other traditional brokerages and exchanges has have been doing, sort of moving into sports betting and other kind of things. And so that's a new growth area above and beyond. Of course, it's more competition. Lots of people are trying to get into that. This one has solid on earnings growth. There's been revenue growth, and their earnings growth picked up in the latest quarter. So yeah, and this is a strong performer for quite a while now.
And we're looking at the chart here, Ed. And this one was a recent breakout here on September 29th out of this cut base, 6807, the traditional buy point here. And so far, it looks like it's extended just above that buy zone, but looks like it's acting pretty well here, Ed.
It is acting well. I mean, it's generally been finding support at the 10-day line for most of the past several weeks. The relative strength line is at a new high. I mean, obviously, it's a little bit extended from the buy point, but even when it broke out, it was basically at highs. So that's a positive sign. You want to see that it's actually outperforming. And this is a pretty shallow, short base. And so even though the market picked up, it didn't really lag during that time period. This has been strong, and yeah, so nice uptrend over the last several months.
And in terms of fundamentals, Ed, you pointed out the growth here. Again, solid double digit earnings and sales growth. I'll switch over to the weekly, see if there's anything else jumping out at you in terms of fundamentals for IBKR.
Yeah, it is slowing down a bit, and especially after this quarter earnings supposed to slow down. So we'll just have to see if that how that goes. Again, where they talk about prediction markets, other things, what are the maybe new opportunities? The up down ratio, volume ratio, that's not a great sign. That's only a point 0.8, and that probably reflects there was some big selling deep in the base, but the stock bounced right back. There just wasn't much volume on a weekly basis, and that also distorted there was huge volume, so that distorted the volume bar. I mean, because now the average is much higher than it was, and so if you exclude that, there was probably some decent weeks in there. So that's just one thing to keep in mind. But this has definitely been a strong performer for quite a while.
All right. Well, let's keep moving on to Taiwan Semi, which is scheduled to report on Thursday, October 16th. The chipmaker is expected to see Q3 earnings climb at 34% to 262 per share. And revenue is also expected to rise 36% to $32.07 billion. And here's why we're watching Taiwan Semi. Analysts are hoping for a full year guidance raise on outlook for AI and mobile chips. Of course, this came after sales numbers for the month were released on October 9th. Those were better than expected. They're also looking for news of price increases, especially for its leading edge nodes. And of course, CapEx spending is always important here as we watch the AI rally continue to chug forward, Ed. But talk to me about we had the sales numbers come out. It seems like TSM might have also benefited from some positive comments from NVIDIA CEO Jensen Huang this week. So again, thoughts here on Taiwan Semi.
Yeah, I mean, this has been doing very well as a company and as a stock. This makes the chips for NVIDIA, for AMD, for Broadcom, for Apple. So The sales were nice, but we knew those were going to be strong. The question is now, and the earnings will be strong, especially now that we know what the sales are. So they probably aren't going to shock, okay, what they would do. But the guidance is so important and the capex guidance because this is one of the biggest buyers of capital spending equipment. And what do they have to say? Are they saying that, yeah, we are seeing tremendous pricing for our chips, we're seeing tremendous demand for the chips? That's a positive for all those chip companies and the entire AI hardware space. So this is the first real big earnings report on that front. Obviously we're going to get tons of earnings report, but this is that first read. In addition to all these kind of things, what will they say about China? What will they say about tariffs and other export curbs? There's just a lot for Taiwan Semiconductor and some of its customers like NVIDIA to navigate. So that adds a little bit of uncertainty, but clearly the business has been doing well regardless, and clearly the stock has been doing well as well.
And speaking of stock, we're on the daily chart here, Ed, and you can see Taiwan Semi broke out of this flat base 248.28 buy point. It quickly reached a 20% profit zone a couple weeks later. Also punched above the 300 level here for the first time, Ed. So thoughts on where this is now? Looking maybe a bit extended, but again, thoughts on the technical action.
Yeah, it's definitely extended. This one really came on because originally, when it sort of broke out, okay, the relative strength line isn't tremendous, and is it really the best one? And I don't know if it's the best one, but boy, has this been steady. Since that thing broke out, it just sort of like chugging along, just keeps on going. The RS line the market's been pretty good during this time period too, and that RS line has been really strong during this stretch. It is in that because it's in that light green area, that's sort of the profit taking zone. And so unless the stock, when a stock gets up that high, it's often a place where you might take some partial profits or even exit the stock, depending on it is. Now, if you want to go for longer gains, you obviously have to hold through things like that. But it is something it often lines up with earnings reports because often it just seems like it gets up that high and then earnings come around. So we'll see. I mean, obviously, expectations are high because it's been doing so well, but it's not. It wouldn't shock anybody if this continues to go up because that AI demand is still out there. So just something to watch on that front. I mean, it's like again, it sort of depends on your conviction, your exposure to it. How much AI exposure do you have? Those are things about whether it's like, you could certainly have the right to hold all of this into earnings. You could also say, I'm going to take some off, and it's just it. This is where your own personal rules have to come in.
I'm switching over to the weekly here, Ed. And again, talk to me about the fundamentals here because we just see this growth accelerating here in the mid part of the year, but it looks like slowing down a bit. So, any thoughts there?
Yeah, the comparisons are getting really much more difficult now. I mean, it's been, about a year and a half of really strong growth. So the numbers are going to slow down, but it's still a solid pace. Now, at some point, that's where the guidance and then, that's where that kind of thing is going to be more important. It's like, okay, are we going to see a more significant slowdown, sub 20% in the near future? Because that's what the analysts are expecting right now. If that's the case, it's just something that, maybe that ascent will have to slow down a bit because this has gone from this is more than doubled since April. So that would be something, but really strong performance for quite a while.
Well, those were some of the big names on our radar, but we always like to do a lightning round here at the end to take as much as we can get in here, Ed. So let's look at Wells Fargo, a bunch of financials reporting next week, as you mentioned. Wells Fargo scheduled to post on October 14th. I'll switch back to the daily here. And this one, Ed, trading below the 50-day line and right at that 80 level.
Yeah, this just hasn't performed as well. And JPMorgan's relative straight line wasn't the most amazing, but this one just sort of lagged a little bit. But it's the same kind of things to look for. And they, it was only a few months ago that they got, I think, or last year that they got their asset cap lifted. So this one could go on runs. It just hasn't been the leader, even among banks, which have trouble really outperforming the market long term.
Let's take a look at Goldman Sachs, also due on October 14th, and this one trading just below the 21-day line here.
This one's been outperforming JP Morgan recently because it's still a little bit above the 50-day line. That could be a place to bounce, but it's pausing. Whereas JP Morgan sort of is coming back into an area where it was trading, say, in June and July. Goldman Sachs is above that. That probably reflects it's more of that pure play investment banking, which has been doing so well. So have to see that. The earnings estimates have been coming up. Pretty solid numbers for that are expected this year and next year.
How about we hop on over to BlackRock, also coming out on October 14th. Again, this one looks like it punched above a buy point, but pulled back a bit, but still pretty close to that entry level there, Ed, and sitting right at the 10-day line.
Yeah, this one, and this one can sometimes have some no. This one, it just depends on what earnings are like. I mean, because it's right around the buy point, so definitely one to watch. Again, the RS line isn't amazing, but it can go on runs, and so we'll have to see how that is. But it seems like unless you're doing an option play, yeah, the RS line has just sort of been flat for the last several years. So, uh, it's not a lot of the financials aren't something you necessarily want to hold long term, but this one can go on run. So, but unless you do an option play, you probably just want to wait until earnings.
How about we look at Charles Schwab? Those earnings expected on October 16th. I'll switch back to the daily here. Trading just below this 50-day line here, but building a flat base with a 99.59 buy point.
Yeah, this one isn't growing as strongly, at least on the revenue side. I mean, there's been some earnings growth that's been really, really impressive, but the revenue hasn't been as strong uh, as Interactive Brokers. And it's not like the comparisons got super tough. And I think that's why the earnings have been really strong, some easier comparisons. So that's just something to keep in mind. It's just not performing as well as Interactive Brokers. On the other hand, Interactive Brokers is a little extended, so this one could it could clearly, break a trend line, get above some short-term highs, so it could be actionable with some strong performance. It just hasn't been leading lately. Yeah, I think above that or just above that short-term high might offer something. It's just have to see how that goes because they'll both be reporting about the same time.
Let's take a look at American Express earnings slated on October 17th. And kind of a similar story here, Ed. It looks like we hit highs and then pulled back, but this one below the 21-day line.
Yeah, and this one has, single digit but high single digit revenue growth, decent earnings growth. It is interesting. A lot of payment stocks and some fintechs, they've come off. Some of them have some pretty heavy losses. This one just bent back a little bit. Yeah, it's below the buy point, but not radically. It could easily get back above that buy point, and it's still finding support above the 50-day, 10-week line. So strong earnings could offer a buying opportunity in another week.
Right, well, we talked about TSM, but let's take a look at ASML. That's another chip main. They make the equipment for the chip makers. This one looking like it's below some short term averages, but it's gone on a run here over the last couple months. So, thoughts here on the technical action?
I would not even realize that there's a handle technically there. I mean, on a daily, I don't know if I was on a weekly, but it's a 48% deep base and a 4% deep handle. So actually, it almost looks a little better on this. After this week, it would be due to have a hand, and this would be a slightly higher handle. The handle would be off the high from this week, whereas on the daily chart, it was off of last week. But as I say, like if you have a Dutch oven size base, you want a Dutch oven size handle for your cup. And that is just this tiny little teacup, and not even a real teacup. That's like a little toddler's teacup set handle on the daily. So, but it could provide a buying opportunity. It had probably provided opportunities around 800 when it cleared some of those highs. You could have almost treated that as a base within a base, sort of an early entry there. A lot of strength and chip gear makers, but they've gone on runs. So I think I'd like to see a longer handle, a little deeper handle, but it may have some buying opportunities. And it's really important to see how this name does as well.
Let's take it home with United Airlines, land this show, so to speak, Ed. This one, a nice gain on October 9th, but coming off highs, but again, trying to stay above this 50-day moving average.
Yeah, this came as Delta Airlines reported earnings, and that also came off highs. But so it'll be, I think at this point, I think when it opened on this day, it sort of offered an entry. It bounced up, came above the 50-day line. There was a trend line entry, but it quickly faded out from the first moment. This is why we talk about waiting 5, 10, 30 minutes just to see if is that early bounce doing it. And that first bar is the first minute, and it was off highs within the first minute. So this is why you wait a little bit. I suppose today's high could end up being a handle or something like a handle in a week or so, or that could be an entry next week. That would probably be like the place where you might enter it. But travel stocks have had a little bit of trouble lately, and that's a sort of not just United and United had gone on a run. So a lot of travel names have come off highs. So it needs to get above, I think, today's high, and got to see how that guidance is because I think Delta's numbers are pretty good, but there was definitely, for whatever reason, that momentum could not be sustained after the first few seconds.
Well, it sounds like the keyword for next week is guidance. So, Ed, thanks so much for your insights today. We really appreciate it.
Thank you.
And this wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. Thanks so much for watching, and we'll see you next week.